All right. Good afternoon. It's 1 p.m. So it's time for another webinar for today. 1 p.m. Saturday. Um, Today is our schedule for our regular webinar, webinar. So for information, our webinars are every Wednesdays 10 p.m. and every Saturdays 1 p.m. So our topic for today is about shark pattern or shark harmonic pattern. So, shark harmonic pattern is very timely because this is one of the few, or not really few, but usually it other than our Gartley pattern, cipher pattern, and other patterns. So, if there are strong bearish movement or strong bullish movement of our prices in the chart, usually this uh, long-legged pattern is more applicable. So, in the case of Ethereum, which happened last night, so instead of our projected, I think this is XABCD, instead of our projected cipher pattern, what materialized is the shark shark harmonic pattern. So I'll be teaching you about this and how to properly use this. And I think after this one, since we already have discussed Gartley pattern, cipher pattern, and now uh, this one for shark pattern. So I will be identifying some of those patterns within a chart, within particular crypto altcoin, and try to identify those so that you would know how to properly use them in combination with each other. So we will just be waiting for some of our participants. So I'll give about 5 minutes before we start. So, but of course, first of all, good afternoon to our participants who are already present here. Hilda, already present. Good afternoon to you. And to those who are still coming in, good afternoon. To give you a background, so we had our playlist yesterday. So, so I'll give you some background information of what happened. So, unfortunately, because we were waiting for the price to at least come up to this level, at least to the 2,700 level or higher. Unfortunately, it only managed to went up as high as 2,600. Our bias really is for short trade, but I included some. That's why during bearish market or bearish market, I seldom trade against the trend. So the trend right now is really bearish. But since we were anticipating at least some what we call bull trap or bullish trap, that it might somehow when it went here, it might somehow go as far as about 2,700 to at least less than 2,800, then we can start our short trade. Yeah. But unfortunately, it only went as high as 2,620, almost 2,630. Then it fell down to less than 2,300. So I'll discuss this later, what happened, to give you an update. But of course, our focus is mainly about our topic, which is chart pattern. So far, we have Arvin Torio. Okay. Arvin, good afternoon to you. We'll still be waiting for some of our participants to come in to join us. Okay. So to those who entered, okay, for our long trade, which was I think this one. So our entry was supposed to be 2475 or lower, but not lower than 23. At least you know the drill. As the price gets lower, so you have to observe and wait for the price to go lower. Then if it comes closer to our cut loss level, then that's the time you can use our your leverage. But if not, if you manage to enter at this price or a little bit lower, so I expect you to at least use minimum leverage, or at least do not use leverage at all, because if you're going to compute your risk, if you entered at this price, and if it reaches our exit level, cut loss level, that's too much, right? So I said the cut loss should be about 23. Okay, so at least if that happened, and I advise about against using leverage if you enter at a high level or a high price. So at least your cut loss is only at less than 7%. Okay. So unfortunately, didn't materialize. So that's part of the game. Okay. Part of the game is, first, if you're going to bet only portion of your portfolio. 5 to 10% is acceptable. Then, if you're going to lose the least. Okay, so if you only lost less than 7%, then that's good. Because the last time we won big, right? I think there are still some of our members who are still have an open position, who entered at 28 something level, because as you remember, as you recall, our previous um, trade plan still open up to now. Our entry was right, I think 2770 or closer to 2900. Okay, so cut loss is at around I think 2900. So if you're still holding it, the current price is in here. So you would have already, without leverage, more than 25% already. Okay. So I think we can start, or at exactly 10 minutes prior to since we started. So as of now, we are about 9 minutes, more than 9 minutes. So we'll start at exactly 10 minutes. Okay, so we will be discussing, as I said, at least the chart pattern. Then we will have some samples. Then after that, afterwards, then we will make lots of samples or practical samples, combining different patterns. Gartner pattern, cipher pattern, and now chart pattern. So I think we can start. Okay, good. So there are lots of harmonic pattern. Actually, you can find it in the internet, in Google. But the good thing is that at least the advantage is that you'll have somebody explaining this to you, and we'll have an actual application of this based on what happened recently to some of our crypto coins or altcoins. So for our topic right now is, I'll put it here, is about chart pattern. Chart pattern. So basically, they are all all the same. The difference are just the numbers using our fib retracement. So this is our primary tool, the retracement. You can use fib retracement, you can use fib extension, but to avoid confusion, I focus on fib retracement. Okay, I will focus on fib retracement. So just like anyway, before I start now, okay, so because we have lots of new members. So by the way, I am Jonas Maronilla. By profession, I am a civil engineer. Okay, so just to inform you and disclaimer, so I am not a financial consultant. I am not a professional trader. So what I do is share my experience and some of my success in trading, and hopefully you'll be able to successfully apply what I teach you. So what I teach is basically not really limited, but really focusing on technical analysis. So how to prepare your trade plan, how to properly execute it, and how to properly trade the right way. So what to avoid, what to do, okay, how to avoid, how to control your emotion, how to improve your trading psychology. So those are part of what I teach. But I do not teach fundamental analysis and sentimental analysis, if there's such thing. Because I they said that there is also this called sentimental analysis, but I don't think there is such. But if there is, so I do not teach those, and I do not teach fundamental analysis. Okay, so with that, no, so just a warning, no, so these are my personal trade plans. These are my actual strategies. So if you want to follow and learn, yeah, so we have these training courses for you to study and learn, and well, basically based on you can see based on the outcome of our trade plan. So there's no 100% success rate in trade plans. So mine is usually between 60 to 65%. Hopefully, even 50% is actually good enough, right? Because for others, they thought that if you're going to, for example, if your win rate is 50%, um, what I'm saying is that if you lose once, so for example, you bet $10, if you lose, and for example, you lose the whole $10, so you will just lose $10. If you win $10. So you are break even. But since in part of what I'm teaching is about risk management and risk to reward ratio, so it's very important that whenever we identify uh, uh, good pattern and we prepare a trade plan and we perform technical analysis, that we should identify at least 1 is to 1.5 or 1 is to 2 minimum risk to reward ratio. Meaning, if you're going into a trade and if you will lose, for example, $1, okay, then you enter another trade, then you lose again. So for example, you lose another one more time, $2, okay. But if you have a risk to reward ratio of 1.5 or 1 is to 1 is to 2, so you lose 1, you win 2. The third time you trade, and for example is you win in that trade, and since we have a risk to reward ratio of 1 is to 2, so on that third trade you won $2, so you are just break even, okay. And just like in our example previously, just like this one, so most of you traded our previous trade plan. For example, this one, our entry was at 27 something. Most of you entered at 28, okay, 2,800. Our ratio, risk to reward ratio was, I think, less than 2%. For example, if this one, so if you enter here, our exit was about 2,900. For example, like that one. So if you enter at 28, let's say, for example, you enter at exactly 28, for example. This is just an example. Exactly 28. So if you will lose, so you will lose 3.5%, okay? Actually, not 3.5% because it should be negative. Okay. So we put it here, 29, almost 29, and you enter at around 28. Okay, so you will lose around 3.2%, 3.3%. Okay, so you will lose, you might lose, for example, 3.5%. But as of now, so our TP actually was at target profit. The final TP was at 2,200. Okay, currently the price is here, but actually it went lower than this. Later we will update this because this is not yet updated. So you would know the current price or what happened to the price. So from here to negative 3.5%. Let's say for example here. So you have you already have about more than or 21%. So you profited 21% because we had a really good risk to reward ratio. If you're going to lose, you'll only lose 3.5%, okay? So if you're going to win, which we all did, we won more than 20%. So that's how much? That's 7, right? 3.5 times 7, or even if we say 1 is to 6, 1 is to 6. So if you're going to lose, you'll only lose one. Okay, $1. For example, $1 to $1. Okay, you're going to lose $1 or $3.40. But if you're going to win, which we all did, so instead of losing $1, we all won about $20. Or multiply it by 100, that's $2,000, I guess, because we have a leverage of 1:100. So congrats to all who won on this one. But then, of course, this pattern became invalid, so we all lose in this one. And since we knew that this is so far from our cut loss level, so I didn't, I advise against using a leverage, or if you will use your leverage, enter nearest to 2,300. So just in case you enter at 3,220, 50, so, and you immediately cut loss, okay? So you would only lose less than 2%, less than, right? Less than 2%. Now, for example, you entered at 23.40, so you only lose 1.59%. So that's what I'm talking about, right? So you'll only, even if you use 100% leverage or 100 times leverage, you only lose 151%. Or if you bet $10, you only lose $15. If you bet $10 here, okay, so you won, how much is that? $200, okay? More than $200. So still, when you lose here, you're still up. So you will have to lose several times in order for you to lose or at least break even in your when you won in this trade. Okay, so that's very important. So that's why even if just in case our winning rate is about 50%, 60%, 65%, we will still win a lot or win big, okay, because of our risk management ratio. Okay, so so much with that. So let's proceed now with our topic for today, and it's about chart pattern. So these are just the numbers that you have to consider in chart pattern. So as you know, so we have, for example, we have this. I'm not sure if it's like this, no? So we always have in harmonic pattern X, then A, then X to A is one impulse. If you do not know, for example, it's like this. X to A, one impulse. A to B is another impulse. Then B to C is another impulse. And this is another impulse. Or they call this corrective impulse, okay? Yeah. So just to name it properly. So this is an impulse, then correction, then impulse, this is a correction. Okay? Again, what's important in using patterns is these numbers. Or letters. So X, A, B, C, D. So you should always know this. So this is applicable to all patterns. This is what we use in Gartley pattern. This is what we use in one more. This is what we use in cipher pattern. This is now what we will use here in we will use in chart pattern, and for days to come we will be discussing other pattern as well. I think we will be completing all those patterns, and you will really have to know them by heart. So you need to practice properly. Practice a lot of time, practice often. Okay, you should perform at least minimum of 100 practice per pattern. Okay, 100 practice with Gartley pattern, 100 practices with cipher pattern. Now more than 100 practices with chart pattern. Okay, so again, so we have X to A. Yeah, that's one impulse. So if we want to know point B, okay, this is always a given. Okay, once one impulse is completed, so that's already that's already X to A. Okay, so what we should know is what will be the next corrective movement or corrective impulse from A to B. Okay, so what you need is, let's move this. So in order for us to find B, let's reduce this to 24. Yan, okay? To find B, so what we need is, we should use fib retracement, fib ret, okay? Fib ret of 61%, okay, of fib retracement of x to a, x to a, yan, to find B, okay? So, if we're going to measure, for example, this one, so from x to a, fib retracement, okay? So, this is the icon. So, from here, look for fib retracement. Just click this. Okay, so once you click this, so you can plot again. So, let's remove this one. Click this one or this one, then click fib retracement. We will plot from x to a. So, the requirement is x to a, and you will find 61%. Okay, at least close to 61%. Okay, so once you have that, so we can adjust this now. I think it's perfect, no? 61.9%. So if you're wondering, you know, just to verify if you have it correctly, okay? So you can use this, then you can use this. Excuse me. Sorry. So you can also use this pattern, XABCD pattern. So XABCD. So you will see the difference, or the fib retracement between A to B is 0.61 or 61%. Okay? 618, so 619, so this is already valid. Okay? So next, what we will be looking at is the measurement for point C. So point C, okay, so point C is actually quite large, no? So it has to be about like that. So point C is about at least 113% of x to a, so at least 113%. If you will lower this down, there, okay? Let's say, for example, this one, 1.11 or more, because 1.13. Let's say, for example, 123, 1.13, a little bit more. Ayan. So, that's 1.13 or 113%. 2, so that's for in order for our pattern to be valid, it has to at least reach 113%, okay, but not more than 161%. So if we were going to increase this 161, not more than, okay, for example, up to this level, okay, yan. So maybe we'll just move this one to make it look better. Yan. So if we'll type it here, to find C, so what we need is use fib retracement, okay, and it should be, fib retracement should be at 113% to maybe we use less than 161% of x to a. In the A to X, sorry. A to X. Why A to X? Because we are measuring its movement upward. Its upward movement. Okay? Because if you will use X to A, so what will reflect is the fib levels going downward. Okay, so there's no fib levels here. Fib levels are going downward. Okay, but since we are looking for level C, and level C is 113% or more than 100%, because 100% is this level. No? From here to here, from here to here, this is 100% level. Okay, so we are going to measure from here down to here. Okay, so what we are looking at, it should at least this point. So we will make it maybe a zone or a rectangular shape. This one, it should at minimum reach this 113% minimum, but not exceeding 161% there. Okay, not exceeding 161%. So let's see if we're going to enter here. Let me check lang. Let me check why there's a difference. But anyway, 161%. It should not be more than that one. Okay. Okay. So I think because I use a different pattern here. But anyway, okay. So for this one, so it should not be more than this one. So we can lower this down. So anywhere in between of this box, so instead of having this box at this level, we put this down a little bit lower. So as long as it doesn't touch this level 161, so we are still valid. Okay, so from here it should at least touch this one. Okay, and it should not be more than this level. Okay, for example, let's say up to this level. Okay, so now we found our C level. So we found our B level from X to A. This is 61% level, and from this one, this is from A to X. So finding C, price fib retracement fib level should be between 113, or it should be at least 113 to not more than 161. Okay, of A to X. So A to X again. So we have measurement of from A, then going X. It should not be more than 161. Okay. Then to find D. Okay, so to find D, let's remove this, and maybe we can adjust this one. Good. So to find D, so we can make a fib retracement. Okay, from X to C. Okay, so whenever we perform our fib retracement from down going up, the fib levels that will be shown will be going down. Okay, so fib retracement from X to C there. So as you can see, fib levels are going down. Okay, and D level is already the end of our pattern. Okay, so D level. Okay, so what we should look is that for the price to at least hit 88%, this one 88%, up to 113%. So it could actually go lower than this, because this is already the last one. Okay, actually it can even go lower, no? But for the pattern, for it to be completed, once it touched this 88%, that's already valid. Until this one, that's already valid. For example, let's say the price still goes down more than that one, that's still okay, no? So because usually traders enter at D level, and once they enter here, this is the limit, then that's the time they can put their cut loss level. So it's up to you to find your cut loss based on previous charts. So if there are some um, previous candles, sorry, previous candles, if there are some potential reversal zones, so you should put your cut loss level at that one. So that's why sometimes it's more advantageous if you will be able to enter inside these points of a pattern. But as I've said, no, it should not be your primary concern or primary basis for entering a trade. For example, so you found out that okay, most probably it's going to perform it's going to form a sharp pattern. So okay, so this is already valid. So you can enter here as long as it will not exceed, for example, this one. As long as it will not exceed, actually, sorry, it should be here and it should be here. Should not exceed 161, for example, 161. So you may enter here, anywhere in this level, and you can immediately set your cut loss at 161 level. Okay, so that in that case, you will know how much is your risk to reward ratio. Okay, so for example, you enter at this point, then your risk is only 1.5%. Okay, you have a risk of 1.5%, but you have a reward of, sorry, risk of 1.5, and you have a reward of about 17%. Okay, of course, pattern is when pattern is only forming, so that's not really the pattern. So other things can happen along the way. So that's why we set our target profit 1, diba? So most of my plans, you can see I'm putting target profit 1, for example, here. Then next is here. That depends. For example, here, because this is a point B, so it could make a reversal at this point, right? Or sometimes, of course, ultimately here. And sometimes, based on other movement here, sometimes there could be some other potential zones, reversal zones in this level. But basically, so that's one of the things that helps us in identifying our in computing for our risk to reward ratio. Okay? So you'll only have a risk of less than 2%, but you'll have a reward of, from here, that's already 1:2. Here, or more than 1:2. Here, you'll have about 7.5 or 7, right? Here, so you have more than 9 or 12. Uh, uh, 1:12 risk to reward ratio. But the important thing is that always a reminder, always a reminder to all of you, be sure that you do not use our pattern, shark pattern, all our patterns, Garty pattern, harmonic pattern, in your trade plan alone. So that's why I'm always encouraging you to study first our training course. So for those of you who don't know yet, so this is our training course on technical analysis, because that's more important than this one, because this is actually very easy, right? Anybody can can make a plot, can plot this, but understanding what's happening along the way as it forms the pattern is more important for you to interpret what's happening. So if you'll see, I think I pinned our post here about technical analysis. So we should be able to see it here. Okay, so if not, where's the pin post? Dashboard. Let's see. It should be here. Anyway, you should review first. So let's go to it. In cell phone, I think you can immediately see it because it's actually pinned. Pin post. Is there any pin post here? Pin post, trade setup, trading post, trading boot post, stock post, RBT team. I'm not sure. Anyway, you'll have to look for it here, scroll it. But if you're using a phone, there's a search button. Here, okay? So you should first study all this. These are 10-part webinar on technical analysis, focusing on technical analysis from the very basics as reading candlesticks, interpreting what is an open price, closing price, high price, lowest price, then chart patterns, then some moving averages, use of volumes, other indicators. So all of those are in here. So this is a reminder to review all this first. Okay? Review all of this. Study all of this. Okay, going back now. Okay, so once you identify, so if we are fortunate enough to identify that, okay, this is already C, this is already one impulse, then we can enter here for a probability of this one. And after that one, we can enter here. The problem is that this could go lower, right? And once it goes lower, that's the only time you're going to start your measurement of fib retracement. But usually the whole pattern stops here. It starts here at we'll do it again. Sorry. Oh, sorry, I move it here. So for example, we start here. That one. So it starts here. The pattern will start. This one could already be completed and make a reversal of prices, or it could end down to this level, 113. Okay, 113% or 1.13. It could even go lower, but our pattern stops here. Okay, so that's why we put it here. Price could still go lower than that one, but our pattern will not be like this. Okay, because the whole pattern is from this to here to here to here and here. Price could move more, but this is still valid. But if our price, for example, letter D, moves more than 161%, for example, like this one, so this is already an invalid pattern. You have to scrap it. You have to abandon your pattern or your trade plan if that happens. Okay, but this one, okay, the whole pattern will end here, will start to end here, and the most is up to here. So once it touches that one, this is our complete pattern. Price could still move downward, but our pattern is limited down to here. Okay, so it's up to you. So if it moves downward more and more and more and more and more, so you don't have to enter this one because pattern is already valid, but this could go as deep as it wants to go. Okay, as long as it wants to go further, go down further, so there's nothing we can do. So that's why we enter here, then we set our cut loss. Okay, so for example, we set our cut loss at this level. So the most is up to this level. Then after that, then we will compute our cut loss. Depends on the candles that will be shown here. Okay, or you can use your ATR. Of course, we use ATR. Then once it touches our cut loss level, then we have to sell. Okay, then there's no trading for that one, because if you don't, there's always an assumption that it's going to revert back. But the problem is, what if before it reverts back, it goes down to this level? Okay, so most probably it won't go as high as here. It would probably just at most go up to this level. So what you're waiting for is just for a break even, because after that it could go down, because for example it could already be a very bearish market like what's happening right now. So that's why you don't have to enter after cut loss level. Okay, so as you would notice in my trade plans, okay, right? So I would say that you can enter here or lower, or even here or higher, but not more than. I always put an emphasis that but not more than at this price, and you should cut loss one if it hits that price. So for example, our entry for long is at this level, so you can enter at a lower price, right? But not more than not lower than 20, 32 32.40, for example. Not lower than 34.30, then you have to make your cut loss. So I hope everybody understand this one. So we can go now to our example or samples based on what actually happened or happening right now with Ethereum. So we'll use this Ethereum as our example. Okay. But before that, we have any question from our participants? Any questions from our participants while I prepare this one? Unfortunately, we still have a problem with our platform, with our setup. It's still showing lot of space here. Then if we're going to remove watcher, this is just going to be blank. So we cannot maximize our screen. There, anyway. Okay, so we're going back. Then I have to remove this. So question, sir. Sir, to okay, to A maximum is 7. Maybe you're asking about point B, no? Maybe not A. So Rain Christian Haleko, what's your question? Maybe your question is finding B, right? Maybe your question is about finding B. You have to remove this. And okay, I have to put D. So D. Okay, let me put first. So to find D, so use fib retracement from, what's that? From X to C, right? X to C, fib ret X to C. Oh, okay. Fib ret X to C, and it should be between 88% to 113%. Okay. If it goes down further or more than 113%, or higher or lower, it's still valid as long as we are already in point D. Okay. Yeah. Yeah, for the question, yeah, it's should not be more than 78%, okay? So at least it should be in the vicinity of 61%. So that's the answer, okay? Update. Yes, yeah, I think there was an instruction to update Chrome. So maybe after this, I'll make an update. Not now. Maybe it will take time for it to be updated. Okay, so this is already complete. So maybe another question. Do we have another question before we proceed with our samples, or we can proceed now to our samples? Okay, so for example, like this one. So that's why I said that it is important not just to look at the pattern. Okay, so it might be forming this one. So there's a chance that it could make this pattern, but unfortunately it did not. Okay, and yeah, unfortunately I wasn't available last night. I had other chores to do, but that's important, right? So it's important that we should also know how to read what's happening, and we need to use our technical analysis for this one, because as you would know, so instead of this happening, what actually happened was, okay, maybe I'll open this part. Okay, so instead of that happening, okay, so with this one, X, A, B, C, So we thought that it should go in this level. So what happened actually, if we're going to revisit, so it's actually this chart pattern that chart pattern that has materialized. So let's check. Maybe we use this one, 1 hour time frame. Let me remove all this. Okay, then remove this moving average. This one. Okay, so if we're going to expand this, so I'll not make any I'll not update this. Okay, so once I update this, you will see the price movement here because this I put my laptop to sleep yesterday, so it only shows the current price. So once I update the time frame, so we will see what happened. But okay, so what happened is that if we're going to re-evaluate, instead of using this whole impulse, okay, so this is also one of the things that you should also try to practice, okay? So there are no rules stating that you need to use the whole impulse. As long as there are some pullbacks, for example, price from here went down to this level, then made a pullback at this level, then goes down again, then made a pullback. So you don't necessarily need to make your or to plot your pattern at the highest level or at the whole impulse of the chart. Okay, you can start anywhere in between. Maybe you can start here, you can start here, you can start here, as long as it still follows our pattern. But you don't start immediately. You don't break one whole impulse. Okay. For example, this one. This is one whole impulse. You don't start here. Okay. What you start is once it makes some correction. For example, it goes down here, then make a correction here, an attempt here. So this is now one impulse from here to here up to the down level. Okay. So what we don't do is make our to start our pattern or plot. For example, this one. So we do not start our plot here. Okay. So we start at the impulse or at the correction. So for example, this one. So you would know that we have this. Then after that is it went down. Okay. Let me check first. Okay. So this one. So if we're going to check whole impulse of this, so let's see if we can find our chart pattern. For example, this is not the correct one, but I'm just showing you how we can make a proper adjustment. Okay. For example, we start from here down to, for example, here. Then let's see if it meets the 61%. Then if it could meet our 113% to 161%. Okay. So from here to here, okay, it should meet at least 61%. Okay. So you see, it didn't. So with that, we can make an adjustment. So we can make an adjustment here at the green. Because after that one, the correction is this level. Okay, so once we did that, so do we already have 61%? So not yet. Okay. So that one, we can make it here. So from here to here, do we have 61%? So still not yet. We can still make a move it down further. Okay. So from here to here, do we already have this one? Okay. Not yet. Good. So still no. Let's double check. Maybe now we can zoom this out. Not too much. Just enough. Okay. So we have it here. And we have this, where is it? Here. Then we have to check 61%. So, still no. Okay. Then we can still move this further down. So, we move further down this green level. So, price move here, then jump again at this point level. So, you would see it now touch our 61%. So, this is now valid. It's now valid. So, we can make this now our one impulse from here to here, down to here. Then we know, then we can find the B. So, this is going to be X, A, then B. So, this is B. And B already crossed 61%. So if we're just going to make a triangle. So from here, maybe it is here, right? Yeah, this one. So from here, wait, from here to here, then to here. So that's part of our harmonic pattern. Then next is this is X, A, B. Then B is fib retracement of X to A, 61%. Good. Then we will find X, A, B, C. So C is, I'll show it to you again. So we'll see that it, let's see if it actually touch. Did it touch the ano? Actually, technically, no, no? Hindi, not. No? So if we're going to make a line, we're going to make a line. So it didn't touch 161 level, okay? So since it didn't touch 161 level, so we can now make another triangle pattern. So we have X, A, B, C, then C to D. And our D actually made it to this level. X, A, B, C, then D. Okay, actually, if we're going to check, I'm not sure, but we're going to check if it already qualifies at this level, at this point. Our level should be, actually, it's this level. So, it's not yet qualified, right? So, it's not yet valid for us to say that it already completed the pattern at this level. Okay, because it has to reach at least 18% or 88% to 113%. So since that's not yet valid, so we can move. This one is already valid, is it? Almost, but not yet. Maybe almost, but not yet. But still okay, no? So you can enter there, right? So, for example, you made that entry at that level. So if you did that, because let's say that's already valid, then it's okay. But if not, okay, you could have waited, then this is already valid. Okay. Up to 113. So did it make 113? No. So we completed our shark pattern at this one. And with that, okay, so that's why the pattern it completed or it formed was this one, not the previous one, not this one. Okay, and this could, and then let's see, you know, X, A, B, C, say C. So let's say, will there be now a reversal from this level going up to that level, or at least up to, supposedly up to this level, the limit, okay, but it didn't hit its limit. So yeah, you can see it made some contact at this previous support level, though support went as low as this one, but this is mostly just for was mostly bottom wick, but it touched this level, at least the body part of the candles, this part. So we can say that, okay, so this is now a complete, totally could be a reversal zone of this part. So you could play your long trading at this part, okay, at this level. And you could have bought here, of course, not really here, but maybe somewhere here. Then you could have sold immediately here, or even higher if it reaches 113. Then that's the time you will play your short trade. So that's why I prefer uh, more to use short trading than long trade because of our bearish market. So the price went down as low as this price. I think even much lower. But if you would notice, okay, so if we're going to make another pattern, um, we this time we're going to use other patterns. So I said that we will be using a combination, so that you could now practice your at least so far we have three harmonic patterns. So if you're going to check right now, so let's see if this is going to be one impulse here to here. Okay, so let's check what other patterns we can see. Okay, so from here to here, usually we check from X to A. Okay, so what we want is at least if we're going to use a shark pattern, it should hit this one. Okay, so since it already hit this one, it could now move to 113 or something. Okay, so that's usually the problem. Okay, so that's why it's important for you to use or to apply your technical analysis. But if not that one, so we'll check. It bounced from here. It bounced here. Then it went here. It went up to this level, and that's already too much. Usually our limit is at 78%. So if we'll check the bounce, it already it's more than 70%. It's more than 88%. So this is already invalid. Okay, so we can check further. So if this bounce is not valid, so let's check for this one. Okay, so for this one, okay, we have here what? Um, from this to this one is already, this one already hit 61%. So 61%, that would be good for what? Gartley pattern. That would be good for uh, cipher pattern. Okay, for other patterns as well. So for example, cipher usually um, okay, then this is X, then X A B, then our C is, if we're going to check now, so we have X A, then what we have to check is if this one made at least 38%. Remember our cipher pattern is at least 61%. So let's check. So let's check from here to here. Did it make 38%? No. So let's remove this one. Let's remove again this one. So it didn't make this one. Okay, so this is invalid for any pattern. So usually our pattern is starts at 38%. So we can put this lower now. Okay, lower. Then let's check if it made some bounce at least to our 30% level. Okay, this one, it touched the 30%. So at least it's already valid for some pattern. So we can start our, for example, our, I don't know which is higher here. But let's say, for example, just for example, so we have here to here. I'll just put it here, okay. Then up to this level, okay. So that's because it hit the 38% level. So our next could be, right. So if this is now our pattern, so 38%. So it could be, we could use, for example, if that's the case, we could use a cipher pattern. Okay, so if we use cipher pattern, X, A, B, C, okay, so C should be at least 127 to 141%. This one, but this is already too much, so this is already invalid. Okay, so cipher pattern here is not applicable. Okay, so let's try to find other pattern that we could use, because I promise we will be using a combination. Okay, so X, A, or maybe for now I'll make an update now. So 2 hours, so we could see the whole uh, candle here. Okay, so X, A, B, C. So X, A, B, then B, then C, X, A, B, C, D. One for a moment, okay, for 1 second, okay, X, A, B, should be C. Well, anyway, we're supposed to, for example, so we found this is already completed, right? So once this is completed, so you can now enter at this level. So this was our original plan. Just like this one, our original plan was to enter at about 2,700. So unfortunately, it only managed to go as high as this one. But since our bias is more of a bearish pattern, so from here, so we could have entered, or you could have entered at this level if you were able to plot this chart pattern. Is this chart pattern right? X, A, B, C. Yes, chart pattern. Then you would have enjoyed this one. So as it moves, okay. So you would have a because you're just looking for your target profit, right? So you're just looking for your target profit when you entered here. But as it moves, then you will also check what is the pattern it's forming. So just like what I've said, for example, it was forming from this to this, then X, A, B, then X, A, B, then C. Then C should be at least around the around the around 141, not more than, of course, but at least it still gave you good confidence to hold it as low as you could, or at least set your target profit, because you entered here, it bounced from here to here, then that's already 38%. Then it again moved a downward movement. It made a downward movement. So your limit is what, 141%. So even though it did not perform, or did not form its cipher pattern, because it's already invalid, because this is X, A, B, C. C should not be more than 141%, but you could have set your target profit here, okay, as it moves along the way. So with that, even though it's invalid, because your plan really is where you could put, or you could take your profit, right? Because you entered here. It's not really to know sea level, so that you can play your long trade at this level. Okay. So if that's the case, so you would have profited at least that one, 14, 13% with that one. But if you're looking for other indication or indicators, right? So you could have a move. Maybe let's try if you could have moved X, A, B, but I think it's still the same. I thought that we could use other pattern here. X, X, A, B, C, and D. Yeah. I think this one, we could use this one. So this is now continuation or use of a pattern on a continuing candle. Okay, so example, you have from here, this is going to be A to X, right? For example, it's just assuming that this is higher than this one. Okay, then you have this one. I'll check later if that is valid. So from here, this one, let's put this a little bit lower. So is it already, did it already make ano? X A B B at least 38%. It's not yet. At least 50%. X A B 38. Then see. So I think it's not. But what we can do is, as I've said, so we can make an adjustment. So this is now the new impulse. There's no need to use the whole impulse. So if we're going to adjust now, just like what we did here, we didn't use the whole impulse. Okay. So if you want to have an idea how to use it simultaneously, so if this is your one whole impulse from X A, so you have to move this now to this level. So, and I'll remove this one. Then I try to expand this. So X, A, then B. So you now have, let's move this here. So you could see X, A, B. So it's around already 50% level. Actually, 50% level is, I'm going to teach you about this one. If it didn't actually hit 61, so we still have another one. I'm going to teach you next time. This is called a bat pattern. Okay, so X, A, B, then B is around 50% to less than 61%, so it's valid. Then next one is from B to C. It shouldn't touch at this level A, so that's already okay. This one. Then at least 88%, this one. So this is another pattern that's already valid, and it would go even lower. So as you can see, right? So if you're going to use this, you entered here, and you sell here, then you entered here, and if you're looking for a pattern or where to set your target profit as it moves, as it forms another pattern, you would have an idea. For example, you bought here, price went here, then it only stopped at this level. You could actually buy another or add another add more here at this level, even down to this level, and by plotting, you would have known that from here to here to here, or it's forming another harmonic pattern. So it only went here. So as long as it doesn't touch this one, so that's still valid. You could have bought here, but you will know that your exit is at least from here and even lower, at least more than around the original, which it did. Okay, so you would have already actually earned, profited from buying here and buying another here, then here. So at this point, we have two different patterns that are interconnected and that are confluent to each other. So that's one of the important things that we should look for when we're doing a pattern, that they are confluent to each other, so that they are telling you the same story, that the pattern we bought here, price will go here, then after going here, price will be moving at this level, but at least before moving at this level, you would have another opportunity to put more, buy more at this level, or even sold at this level and buy again at this level. Because at this level, at this point, at least somewhere near, you would have seen that it actually made a reversal because of this multiple touches or consolidation at this point, previous resistance, which is now the support level, and previous resistance of this one, which is now the support level. So you could have buy here, sell here, and buy here, then sell also here. So, but it moved further downward. So if this is your trade plan, then that's okay. Okay. But if this is your trade plan, then after seeing, right? After that, you notice that, oh, it's forming another pattern from here. Then it's moving here. So maybe I could check. So this is going to be X, A, then B. Then this could be now our C. Okay, X, A, B. Then could be our C. So check what other patterns will be there. Okay, so with that, I'll check other patterns we can find so that we could interconnect our three patterns. So let's check here. Okay, so since actually the good thing when using our harmonic pattern, especially for non very bearish or non very bullish pattern, is that we could to identify a big range. So we have a big range actually here. So this is one big range. We can say this is a range or a big range because usually it moves in this direction and our patterns forms in this chart. So let's see if we could find something. For example, we have X, A, B, C, then D. So I think this is one completed pattern. So X, A, then B, then C. As long as our C, as I've said, doesn't touch this one. So that's okay. Then D usually is before the end or it can even go lower, right? So this is one. So what's this? Is this Gartley pattern or at least let's see so from here this point up to this point did it touch at least 61%? No, it didn't, but this is for other pattern because it touched 50%. I'm going to teach this to you next time. This is just a bad pattern. You can actually Google it in the internet. So this is one pattern X, A, then that's the highest, then B, then C. Then for this one, let's check if it made another pattern X, A, B, then C. What pattern did it make? I'm going to measure again. From here to here, it should make a bounce of at least 61%. I don't know, or third. If it's usually it should. For a while, X, A, then B should be at least 61%. At least 38%. Okay. So actually, I just get confused on the previous one, but I'll get back to that again. Okay. So from here X, A, then B. So it already made a 38%. So as you know, cipher pattern is at least 38% to 61%. Okay, cipher pattern. So this is 1, X, A, B. Then the next one should be, and let's try to change this color to maybe green. Yan, okay. So X, A, B, then C should be at least 127% from this one. So 127% of since we are at that level, that point, so it touched 127%. So this is valid. So X, A, B, then X, A, B, then C is this one. So let's make another one. Then D should be at least 78% of the whole. At least 78.6%. Let's check where is 78.6%. This is this one. Let me remove the other one. Maybe this one. So we have to check the 78%. 78.6%. It should. Okay. Okay, so it didn't hit this 78. It's still okay actually. If you have weighted X, A, B, C, D. So I always say that letter D is the last point of our pattern. So since it didn't touch this level, so I'll put this up. Okay, since it didn't touch this level, but this one actually exceeded it. So that's already okay. Yeah. So So actually, there's also this option for it to touch, um, but it's actually lower now. So 78 is actually okay. So yeah. So it's still valid for this one. You could have entered this one, but your exit should be at least a little bit more than your level A. Okay. So since here you would have entered because you would, as you can see, it was falling at this part, but still it managed to went as high as this one. But our pattern stops here, right? 78%. At least this one, 78%. Okay, so after entering this one, you will have to place your cut loss at this level, at least this level. So that's what I'm telling you, right? If you would have entered here, for you to find your cut loss, first, of course, it should be at least at the this level. This is level X, right? Level X. And a little bit more than that. Since your level X is here, okay, and you still have this point here, your resistance, okay, so you could have put your cut loss at least a little bit above here. Because I think if we're going to adjust this, let me see, if we're going to use this as a reference, this as one whole impulse from here to here, let's see if it will if it will qualify. Yeah, it actually qualifies here. So we could actually use it here. I just put it here so that, of course, you would see it much better that we have a continuing pattern. But actually, we could have started here. Okay. Problem is that, of course, it will overlap. See? It just overlap. But still okay, no? So it doesn't really have to look pretty. Yeah, I just put this here for aesthetic purposes. So that you would have seen, okay, so it made a pattern here. It may also made a pattern here. Yeah, but actually you could use it here because from this point to this point is also one whole impulse. Okay, because this one didn't touch this level. Okay, so you could have put it here. So you could now measure your point D. So from here to here, and it should be about 78%. So it's actually there. So it doesn't really make so much difference. But the thing is that you can now put your cut loss above this level. Okay? You would have bought here, then your cut loss shouldn't stop at this level. It should be a bit more than that one. When it made another high in this level, but it didn't touch this one. Actually, we made a plan. We made a trade. This is actually one of the basis of my trade. When we're able to enter at this level, down to this level. So that's why I said that our entry should not be more than 29.10 or 29 something, right? So as long as it is within that range, so it's still okay. So you could have added more, buy more here if you're going to play another short trade. So let's try to make a continuation. So for example, since this one, your pattern already ended here. Okay, you could have put it here, but as I've said, the limit of our pattern is here. But we can extend it a little bit. So just for demonstration purpose. So it's there. Then if it's okay with you, so I'll just put it here. Okay, if that's okay. So let's see another pattern that it formed. Okay, so there are lots of things that happen in this one. So from here, for example, X, A, B, then C, right? So we can make another, we can check again. So this one. So, and after this one, okay, so it's very important for you to practice. So, if you haven't done practicing Gartley pattern individually, then individual pattern for cipher pattern, then individual pattern, of course, for shark. So, don't do this yet. But if you've already done that, especially hundreds of time, or at least, or more than, or at least thousands time more. So you can now try to practice this multiple harmonic pattern. So from here to here, let's check. From here to here. So let's see. Is this already, did it make at least 50%? No. Okay, so it didn't. So, because if we're going to use the 38%, what we're usually expecting is for our level C, for example, this one, X to A, then B is this one, so it's only about 38%. We are expecting our C to be more than this level. So, it exceeded this one. So, if we're going to use this now, X to A, but it didn't manage to at least make it to 50%, what we expect for level C now will be more than this one. Okay? Will be now more than this one. But since as I've said, our bias is for the chart or price to be more bearish. So instead of that one, so we could have adjusted now our impulse from here, maybe a little bit more from to here. So once we adjusted, so it already qualified to at least our bat pattern. This one, so bat pattern. So if you're interested for bat pattern, you can advance study bat pattern. But I'll have a separate discussion about bat pattern, bat harmonic pattern next webinar. So it is already valid at this point. So we can make another triangle. So for this one, so I'll just stick it here at this point. Okay, if that's okay for you, just for plotting purposes. So from here to here, okay, at least this one. So I don't really have to stick it to the point or to the top wick or to the body of the candle. So from here to here, then we have this. This is already valid. Okay, and I'll change this color maybe to color red. Okay, so we have one pattern here. So we earned or we profited in this one. We profited this one. So we actually profited at this one. So X, A, B, then C. Okay, C is usually right. If it touches 38%, but not more than 78%, then that's okay, right? Then so let's check. Did it touch 78%? Almost, or yes. Since it touched, actually, it's so if since it already touched it, so this is already invalid, so we will not be using this any longer. So let's look for other pattern. It actually touched, no, just exactly as at that point. Okay, so maybe they know that we're using a pattern, but actually it didn't, no, technically it did not. So we can actually put this a little bit higher, just exact at the exact point here. So it didn't touch this point, so I think that's okay. So that's still valid. So this is just exact. So we have X, A, B, then C. But unfortunately, no, it should go down at least from here to here. But since it made its jump, it reached more than the 78%. So actually, it's still going to be invalid. So this is still invalid. So we'll have to check now. So if that's already invalid, so that's going to be scrap. So, but we can still check for other pattern. Okay, X, A, B, C, D. So there is a small pattern that I'm seeing here. So let's remove it. It doesn't have to be all big patterns, right? So maybe we have here X, A, B, then C. Then I think this is already also a cipher pattern. So let's check if it's around 127% to 141%. So yes, it managed to at least touch 127%. So with that, we can make another triangle. So from here, let's just put this close to this side. Then we have, so X to A, then B, this point, because this point is definitely more than 38%, right? 38 to 78%. So just to be sure, so I will also measure it. So this one, down to this one. So it's more than 38%, but not more than 78%. So it's valid for our cipher pattern. Since it is valid, so we'll make another triangle from here. So XAB, then C, then D is, how much is that? D, 78%. This one. So we are valid at this point. Okay, so that's another pattern. So as you can see, it doesn't really have to be always a big pattern. So big pattern, yes. So small pattern is okay. So we have this one. So we have big pattern here. This is a X, A, B, C, D. So I think that this is a Gartley pattern. This is a cipher pattern. This is another cipher pattern. So after that one, let's check this one. X, A, B, C, and D. So there's another pattern here. So you would see again. Let's check. This shouldn't be more than 78. Actually, we checked this before, so it's not more than 78. So this is good. So X, A, B, then C shouldn't be touching this one. Did it touch? Let's see. I'm not sure, but it shouldn't touch this one. So let's use and check it. We just want to be technical about this. So it didn't touch, okay? So technically it qualifies for another cipher pattern. Okay, so that's good. So let's draw another one. So from we have X, then A. Let's just put this here. It doesn't have to touch it. And the important thing is that it is within the level, this level. So X, A, then B. Then B didn't touch 78, so that's still okay. Then we'll just change this color, maybe a purple color. And then X, A, B, then C didn't touch this one. Technically, didn't touch this one. So let's make another one. Then D should be at least, what pattern is this? X, A, B, C, D. So this is a Gartley pattern, right? X, A, didn't touch 71, but exceeded 78, 78, didn't touch 78, exceeded 61. So that's a Gartley pattern. Then Gartley pattern shouldn't touch level A, it didn't touch. Then level D should be at least 78% or fib 1 to 1 to 7. So from here to here, 78%. So it's actually more than. So it's actually okay. So that's another pattern for that one. Then after that one, so as you can see, no, you can prepare a lot, no. So it could be big patterns, it could be small pattern. It doesn't really have to be all that big pattern. You can actually make this one big pattern. X, A, B, then C. It could go further, so that it could form another cipher pattern like that. Okay, but for this one, let's see what pattern it formed. X, A, B. So not that one. Basically, it's already this one. X, A, B, then C. So B is actually. So that's why I'm saying that this could go a little more deeper if it's going to follow the trend. So although it broke this one, but it already break this one, so that's already invalid. But as I've said, no, cipher pattern could be between 38% to 78%. So it crossed this one, and now already crossed this one. So this could go further. So it depends if we're going to use this whole impulse. So price could go as low as what? This one, or at least 113, right? If we're going to use our shark pattern, at least 113. Okay, so let's try to use a shark pattern for this one. So shark pattern, it has to at least 61%. Let's remove this. Remove this. Remove. Then remove. So first, it has to be at least 61%. So let's see if it hit 61%, which it did not. This one, okay? But we can adjust this one because from here, it made a bounce to this level. So we can actually put it here, okay? So it touched 61%, but not 78%. So we have X, A, then B, then C could be now our, so this is, and what could happen? At least, at minimum, 113%. So from here to here, where is it? This one? Yan. 113%. It almost touched it. Yeah. But that's just a minimum. It could go as low as 161%. So that's why I'm a bit reluctant to um, uh, perform another long trade plan because once it touch here, it could reverse or move as low as 20,000 level. This one. So, where is it? This one, huh? So, X, B. So, from here to here, at minimum to here, to this level. So, we have another from X, A, B. Then, is that correct? Sorry, X, A, B, then B, C. Okay, so B, then C could be here. Sorry. C could be here. Let's put this back. Yeah. And before going back again. So, this is minimum 113. Okay. It could go as low as 116. Yes. Let's check if there are something. So maybe just this level. So maybe at just this level. Okay. Then going back to, so since this is a short pattern, it could go back again to at least X to C. At least 88%. Maybe this one, 88%. That level. Okay. 82 even more, no? 118%. But let's put this at minimum. So that could be another pattern that it could form, no? But I will not be putting this now because it hasn't materialized yet. So we still have to look for, wait for the small pattern that it's creating right now. It's forming right now. So I'll remove this. Remove this. Okay, so as we see X, A, B, C. So this is another shark. Is this shark pattern or shark pattern? Because this is too much. So I think this is actually a shark pattern. Because it's 161. Yeah. From here, X, A, B. Yeah, so it made. So I think this is now the shark pattern. No? We plotted before. So X, A, B, then C is less than 161%. Then D, then we made this one. And now it's forming this pattern. So let's see. Once this is formed, it could materialize the bigger picture, bigger part of the chart. So that's why for now, what we'll have to do is observe. So I hope now, so you learned a lot from this webinar about how at first how to plot shark pattern. Of course, that's added harmonic pattern in our topic. But since we already have third, so we were able to use all three. So this is a Gartley pattern, cipher, cipher. Then this is Gartley. Then this is the shark pattern. So then this is X, A, B, C. So this is another Gartley pattern. So as you can see, just in this one whole chart, and if we're going to use the box, so that's the good thing about the box pattern, our box pattern. Okay, they are all within the range. So within the range, actually, you'll have an idea, as I've mentioned in my previous webinar. If you want to have an idea of where a particular, even though you are looking at the chart, okay, at least using the chart, using the box, so you can just cut it in half. Not this one. You can cut this in half and try to find the middle part, which is this one. So what's usually would happen is that if the market is bullish, uh, it will mostly work on this upper level because it is bullish. Okay, so during that time, it went down, so it showed a little bullish, so it played in this level. But after that one, we saw some pattern, right? And while having this pattern, at least we have an idea that it could go down to this level. Okay, so you found out that when it reached this level and try to check, it made a consolidation at this level, not really exactly half, but for example, it made a consolidation at this level. You check multiple touches, even if it's not there, right? So made a consolidation at that one. For example, if we put it there, you'll have an idea that when it goes down, it would at least reach this level. Okay, so at least that's going to be a big help in performing your chart pattern. You have this, you have this, you have that, you have that. When it goes down here, you have an idea that now it's forming a cipher pattern and it touched your middle part of your box. And you are biased that it's going to be a bearish. So at least you know that at least it will touch this part of our box, which actually it exceeded. Okay. So after touching that part of the box, it has to complete our pattern, right? It has to complete our pattern. But since it already touched our box, so we can now make an adjustment. Okay? We can now make an adjustment. So we can remove this. So this is already complete. So you can now adjust your box down to this level. Okay? So you have this one, you have this one, and, right? You have this pattern. You have an idea that it would at least, not really at least, but within the vicinity of our resistance level, at least more than 75% of our box, which it did, no? So it touched here, it went up here, retest middle of our box, so it's exactly 50% of this one. It retested our middle part of the box. After retesting, you have now a good confidence that your pattern for example, cipher pattern for this one could materialize because it retested this one and showing that it is moving on a bullish direction. So that's why it even reached this one. So it's already qualified at this one. Then it even moved further up to this one. And of course, it retested again our middle part of the box, and it showed a double bottom of this one. So you could play another pattern with this one. So you'll just have to check. So it retested. It started here, ended here. So this is one whole impulse. You could check at minimum. Usually, what we do is it could stop at the 38, then make a reversal, or at least 61% to not more than 78%, which it did. Okay, so you would have sold it at this level, of course, or at least you could have bought at least in this level to make another short trade plan. So by here, you could have sold here, or you could have hold. Then when it reaches here, you can buy again, at least because this is now a strong resistance of our box. Then it's showing a bullish pattern during that time. So this is now, as long as you have this whole box within the range, and the range difference is significant. This is about 30%. So that's significant. There are lots of patterns that you could play inside of it. But once our pattern, our market becomes very bearish or very bullish, then that's where you can apply our uh, shark pattern, because usually the movement of bearish is at least is up to maximum of less than 168%. So this is just a small one, but maybe I'll try to find bullish, just one more example, a very bullish or very bearish movement. Okay, X A B C. Let's try to find one very bullish or bearish movement. X, A, B, X, A, B. I can't find it here. X, A, B. See, actually, this is already okay, but it didn't manage to make a recovery. But if you're going to use this, I think at least it made it to at least 161%. Actually, it's actually more than, so it's too much. There are other more bearish or bullish pattern I'm going to teach you in coming days. So this doesn't qualify. Okay. So I'll just reserve that example for in our next webinar. So I guess that's it, no? So if you're looking for a cheat sheet for that one, that's actually available in the internet. So you can find it. There are lots of images and photos for that one. Vincent. Next, is there a chance mag-drop ang or BTC to drop below 30K? I don't know. So we'll just have to check if there is a chance. So we'll just use because as you know, I just use technical analysis. So this is just I'm just gonna make an example, right? So let's see if we can use our one of our patterns in this case. So for this one, maybe we can change this to our time frame because this is in range. So it's actually in range. So I'm not sure now, but I think this one is X A B C D. So I think this is already a shark pattern. It's more than, so it's not a shark pattern. What else? Or maybe this one. This one. And this one. This one is just actually a simple cipher pattern, but it's not yet completed. So we have X, A, B, then C up to 127 level. So it's supposed to reach at least 78% of this one to make a recovery. Sorry. Okay. It almost did, no? Pero not yet. So I think there's going to be one more bull trap for uh, for Bitcoin, but of course, so let's just check. Let's just use now the 1 day time frame. So for 1 day time frame, so what do we see here? Actually, unfortunately, if you're really going to look at this, if we're going to use our box, it's really going to touch 30,000 level. Just a simple this is just a simple RBT box. So we have this one at the top, and this is the lowest it managed to go. Then try to use a gun box. Let's try to find 50%. 50% here. So as you would see now, so it respected our middle part one time, and attempted to reach our resistance level, but unfortunately, no, so it only managed to, you can actually, this is actually technically a quadruple top pattern, no? No, not really that exact, but as you can see, no, with the exception of this, they are mostly quadruple top, this one. So this is really a bearish pattern, and not only that, no, it only showed several head and shoulder pattern from this one. And if you're going to use our axe strategy, RBT axe strategy, so what's we want to see when using this axe strategy? So what we want is that for it to not break our structure, this one. So it broke our structure once, it broke our structure twice, then it made an attempt the last time. So this is really a bearish pattern. So once there's a break of a structure, usually it's going to make a reversal move. So let's continue this one. Maybe this one. This one. Okay. So actually, let me check na lang. So since it broke at least this point, right? So now we can use the X, showing that it's going to make a bearish pattern, right? So I've taught you this several times. So if you haven't seen it yet, if you haven't studied my discussion about RBT box, right? Once there's a contraction right here and you see this axe pattern, once it breaks our structure, this is a structure, this is the highest of our axe. Once it breaks that, there are several options that it's going to make, but most probably it's going to move downward. So first is it could make a head and shoulder pattern, which it did actually. It made a head and shoulder. So head, shoulder, there's a head, then there's a shoulder. But of course, it's still because of that, it deceived our traders by showing a bull trap like this. Traders thought that the head and shoulder didn't materialize and actually made it up to this level. But if you're going to use our principle, let's see if it made 127, because that's our limit, no? The options that I've always always telling you, it could make a head and shoulder just at this level. Another one is it could make a double top, which is also a bearish pattern. The other one is it could make a Fib 127 retracement up to that level. Then after that, it's going to move down. Okay, so let's check if this is about 127 Fib retracement. For that one. Actually, this one. Yeah, because of this one. So you would see it is actually it's pretty accurate, no? So you could see that it really just touched the Fib retracement 127. So I plot it at this point and also at this point. So it just touch it. Yeah. Okay. Just exactly Fib retracement 127. So if you know how to read the structure, if you know how to use our axe pattern and also our box pattern, you would have an idea that it's going to be a bearish pattern. If this is a reverse axe pattern, it's going to be bullish, right? So, but since it's not, so it went as high as this one, then immediately use your box so that you would know how far it will go. So it most probably, since it didn't touch it yet, so there's a chance that it's still going to touch it. So for your question, Dex Galande, so you ask if there's a question, if there's a chance that it will hit below 30,000. By this one, it's actually less than 30,000. It's less than 29,000. Okay? It's actually 29,000. And I think that's going to be just the beginning. Because after this one, there could be now a breakdown of this one because it has been relatively testing the support level for several times, at least maybe 3 times, 1, 2, and 3 times. And it could happen again. Then once that happens, because what we want to see or what we don't want to see is that for a price to make a move closer to either support or resistance level on a very slow pace or slow movement. What we want to see is that for it to make a very big move, for example like this one, but this time we don't want this. Or actually we want this one because we played the short trade for this one. We want it to make a strong aggressive move towards the resistance level because if that's the case, usually it also makes a strong aggressive move, a strong aggressive reversal move. So it made a strong aggressive move upward. So it's going to make a strong reversal move downward as well. So what we don't want is for it to make a slow, steady downward movement because that could cause now a problem that or signify that it's going to break our support. It actually could make, but it's still okay though if it's going to make an aggressive move downward, because it's going to make a good reversal after that. Just like for this one, although it didn't hit this one, but this one, right? It made an aggressive reversal move. This one, so after that, it made an aggressive reversal move. But since market is really bearish at this point, it still made an aggressive downward move. Then a lot of big candles, at least up to this part. Okay. So you should always expect that kind of movement. Even here. So look at this one. So it made an aggressive move upward. So it made an aggressive move downward. Okay. This one, this made an aggressive move upward. So what would you expect? To make an aggressive move downward, right? That's not always the case, but it will still going to make an aggressive move, either upward or downward. So after it consolidated for a while, it made an aggressive move upward because of this aggressive movement prior to that. Okay? So it doesn't necessarily mean that it's going to immediately make a reversal move, but what's more likely to happen is that if this one made an aggressive move upward, no? If it didn't happen, it could make a more aggressive move upward. Okay, so that's usually the case. Either it could go upward strong or strong movement direction. But either way, it's going to make strong movement. This is a strong movement upward again. So this is a strong movement downward. So that's it. No? So that's for your question. If it's going to be below 30, I'm actually expecting it to go around, let's see, this one, 20,000 level. Okay. So I'm expecting it to be at about 20,000 level, because this is we could say just a resistance from the traders, because they thought, most of them thought that this is already the low, okay, and the Bitcoin will still be good in these coming days, right? So there are still some resistance, and still buying. There are still a lot of movement or trading that's happening in this level, but since the movement is happening at the bottom part of the level of the chart, if you'll just zoom out and step back and look at it, this is actually our classical what? This is a classical continuation pattern, right? So maybe I can maybe just make a rectangular pattern. Okay. So what's usually so for that, usually that's a bearish pattern. Okay. So you have that. You have this. So that's why my biases and trade plans are mostly for a short trade. So I just made an exemption of that one. But actually, I just forgot no to put a warning that uh, if you want to uh, the long trading is just for us to wait actually for the buy opportunity to make a short trade. But actually, it's already there, so that's still okay. So we just made our cut loss around 1 to less than 3%. So that's a continuation pattern. So we have a flag here. We have an inverted pole. So next is that it will make another breakdown at that point. And that could be at around 20,000 level as shown by this one. And I'm not sure if it could go low. Oh, this one. So this is a more pronounced. Of course, it could hit this one, but this is a more pronounced one. So let's check again. What do we have here? So maybe I will move this to weekly time frame. So on a weekly time frame, what do we have? So this is really a strong bearish movement. So from here, we have here. So it's already in about 50%. So X, A, B, C, then it could make a D. No? So since it's just in the 50% of this one, didn't touch this one, so it could go as low as 88 actually. So actually it's really going in this level. This one, right? So if we're going to draw, but at least hopefully I'm not sure, but hopefully there's going to be a trap, bull trap that's going to happen first. So X, then A, then B, then C usually could be just 38%. I'm not sure with that. Let's check the 38% bounce. So from here, could make a bounce. 38% is about, oh, happened. No, sorry. Dito pala. So here. And 38%, it could be at least, at minimum, no? Could go up first to this level. It could go higher to show uh, uh, bearish, bullish pattern, or could be just half of our box. Yeah, that one. Then after that one, then it could go down to as low as 10,000. Yeah. Okay. Especially if because I don't think it is officially uh, bearish market, no? Or okay. Let's say it's already a bearish market, but we are not yet experiencing because there is a big probability or chance of a market crash on crypto, because especially now that it's becoming very popular. So there's a good chance that there's going to be a big crash on crypto. So that's why all my profits I keep them in my wallet, all my profits. So I'm waiting for it to at least go between 20,000 to 10,000. Once it hits 20,000, so I'll make a small investment. Then hopefully it goes down further to 10,000. Then that's the time I'm gonna put most of my profit at this 10,000 level. So okay, so at least you now have an idea of what might happen right now with this. So it's actually a bad sign that it didn't hit 61% of it retracement, because instead of just 78% fib retracement 78%, it could go as low as fib retracement 88%, which is at this level. So any more questions? Do we have other more questions for this one? Okay, so you can use this one. So at least for weekly time frame. So this is it. So actually, other than this, maybe we can use also, let's try to use a shark pattern or a cipher pattern, okay? Because they're both telling the same story. So from here to here, so how much is that? 161. So I think that's already good. Okay, or tama, 161. But from here, it should be at least this one. Oh, okay. It didn't hit this one. Okay. If we're going to move this now a little bit higher, so it's already invalid, so that's not good. This one already invalid. So I guess it's not no. It's not applicable for this one. So only the Gartley pattern. The bat pattern actually, not the Gartley pattern. So X A B and X A B then C, or the other long crab pattern. So I'm going to teach you the long crab pattern next time. So any more questions? Do you have other question about this one? So as long as it relates to our shark pattern, harmonic pattern, so I could entertain some. Are you okay with that, Dex Galande? Do you have any investment with the Bitcoin, Dex? Dex, do you have any investment? And who else who wants to ask question? Okay. And just to give you some sample, at least for maybe for Bitcoin, some example. Let's remove this. So this is actually what happened last night. So X, A, B, C. So, but I think that's too much. It's too much. X, A, B, C, D. So if this is going to happen, that one, we also have this one. Not yet here, but of course we could go higher. After that one, just 38. X, A, B, not yet. So I think not. No? 50, X, A, B, C, D. So if this is the case, so it could further at least still at minimum go even further, go down even further down to this one or at least this one. So there's still going to be some movement, downward movement for Bitcoin at least for this weekend. Another question, are you using the default setting of Fib extension? No, I adjusted this one. I posted the Fib extension settings in our Patreon, so you could check it there. So it is posted there. Maybe you just search, type in the search button, Fib retracement, Fib extension. So you just have to make an adjustment, or you can do it yourself. Okay. Just like for example, so example is Gartley pattern. So what you need in Gartley pattern is 61% level, 127 level, right? 78% level. So you could adjust it there. In our cipher pattern, there's 161% level, 141% level. So you need those, 78% level, and even 113% level. So you can make the adjustment necessary adjustment yourself by just following the Fib retracement levels. So if there's no more question, I think we can end this session already. Then next time, I'll introduce another harmonic pattern. But before that, maybe I'll do it at least next week. So you really need to study a lot, practice a lot, no? Then hopefully by next time, you'll be able to at least show me the multiple harmonic pattern in one chart, right? Like for example, isn't that nice if at least you yourselves can do this pattern, no? And wait, especially if there's something happening right now, so you can do it. Hmm. X, I think this is still the same X, A, B, C, so nothing significant. So maybe if this is going to be that one already, so this could be the start of your new A, X, A, then B, you have to wait for 50%, 61% to less than 78%, then C, then D, then another movement. Jimerson, yes. Okay, Jimerson, so yeah, you can adjust it yourself or just search in our Patreon the settings for our fib retracement. Okay, no more question. Rain, no more question. Venus, question. How about Shiba? I'm not familiar with Shiba. I tried the Shiba once, no, but uh, uh, I immediately use a short trade plan for Shiba, knowing that it just made an initial strong move when it was introduced to Binance, but after that, most of my trade plans, I actually posted some trade plans for Shiba. So if Bitcoin is going down, Ethereum is going down, so definitely Shiba will still go down. Going to zero, I'm not sure about zero, no. I don't know about zero. Is there such thing as zero? I don't think there is such thing as zero. It can only go 0.0000000.1 0.00000. So I don't think it's going to be an absolute zero because there's going to be a value. Because for example, you have a share in coins or in stocks. For example, the value is $1. Then value reduced to $0.50, like for example what's happening right now, then it became 0.25, became for example value is $1 and you have 1,000 shares of that $1, okay, the price then became $0.5 dollar, but you still have 1,000 shares of that. The value of your 1,000 share is just 0.5, okay, then it became 0.25, it became 0.1, 0.005, 0.00 something, but you still have 1,000 shares of that one, okay? So that shares still has to have some value, although the value is 0.00000 something. It couldn't go, it will not go to less than zero. It couldn't even go to a negative value. I'm not sure. I haven't checked that one. So, but for me, based on my sorry, I'm just new with the crypto, but at least for stock market in Philippines, so I haven't experienced zero or negative zero value of stock or a share. Okay, so because if it becomes negative, so ibig sabihin, no, so, you now owe something, no, so you are in debt. That is basically what it means if it becomes negative. So so that's why it couldn't become zero. It couldn't become it will not become zero. It will not become negative. Which time frame is more effective? You can use multiple time frame. It depends. You can use, yeah, for this one I use 1 hour time frame. For BTC I use Bitcoin I use 1 day time frame. So it depends. Especially because what you want to see is use a time frame and see how different time frame, it depends. So for example, this is 1 day time frame. So you can use 1 day time frame and make a box out of this one. Maybe it could go as high as this one or this one. I'll uh, I'll exclude the top week. Okay? I'll exclude top week, or it's up to you. You want to use bottom week? It's up to you. If you want to use bottom week. If you want to use top week, then it's up to you. So for example, I'll just use top week. Yan. So you can do that and check the middle part. So as you can see, it's now heading towards the lower portion of our box. And for quite some time now, it has been retesting this part of our box. So it's up to you. Then after that, then you can use lower time frame and see the movement of that one, and it's still within the box. So since we use lower time frame, our previous weeks now becomes body of candles. So we can now adjust this one. Then we can now also adjust this one. Okay, but still, so upon checking, so it's still heading towards below our middle part, lower part of the box. So it made a test here, made a test here. It made an attempt here through this top week, then it failed. Then it tested or traversed this middle part of the box, and it showed a very bearish movement after that. Okay, so you don't be surprised because of this one. So this is actually anticipated already because of this strong movement of these candles. Okay, as I've said, okay, there's always going to be an aggressive move. We're just not sure if it's going to be upward movement or downward movement, but definitely there's going to be a strong movement of candle because of this one. So unfortunately, what happened is a strong bearish movement of this one. So it tested this middle part for several times, 4 hours. So these are several days, starting June 10 or June 9. So now is June 11, 12. So it's been more than 3 days already. Then it broke down, middle part of this one. So since it made this movement, so there's a chance that it could further move down. So that's why I have this one. So I think my basis was this one, at least. Because of this one, this is a continuous strong movement during June 9, June 8. Okay, so that's it. Thank you so much. Billy, thank you. Boy, Jimerson, thank you. Mr. Market, thank you. Yo, Dex, Vincent, Rain, Venus, Arvin, Hilda. So keep on practicing. Perform lots of back tests, no? So you would be amazed how important our Z pattern, harmonic patterns are. So it's actually predicting movement of our chart, but with the help of technical analysis, it will be more effective once you combine our usual technical analysis to, for example, this one. So let's see if we had an expectation for this movement. So let's, for example, check RSI. Do we have what do we call this? A bearish pattern, a bearish divergence for this one. So high, still high. Okay, so no bearish movement. So this one is going high, going up, down, so no. We're just checking it if there are any. At least this one, there's an oversold level, and it reached the box. So okay, so oversold level. So there are, so that's why there was a reversal of this one. So if not from here, we can check MACD. Let's try to use MACD. Was there any signal in terms of momentum? Yes. So you could see here. So MACD, I think, is part 8 of our training course. So we'll make this a column. So as I've always said, if there is a strong momentum happening in our histogram, there could be a strong movement, either upward or downward, right? At least there's already a good indication that there's going to be an aggressive move. At least since it's going down, so it's pointing there towards reversion of our histogram. So you see, there's not much movement in this part, right? But since we have this very strong histogram momentum in this part, so that's why we have a strong reversal of movement. Just like this one, no? So this is a very strong momentum at this part. So from here, it went from here to this part, right? So after that, it made a strong shift to this point, okay? So it doesn't really have to be a drastic movement. Like, I'm not sure, like for example, like this one, that from here it becomes almost zero, no? But what's important is that once we already have this very high momentum, you can expect some movement. Either it could go further high or further low. Okay, so in this case, it went down from here to here. So there's a difference of about 8% before moving up again. Okay, so at least you have an idea that there's going to be a big movement. So you could check now from here. So you are about at the resistance level. There is a potential reversal zone because of this previous support, and this it now became your resistance at this point. So that's why it made a reversal after this one. But since it already for example, since it already reached this level, so that's why it attempted even further after that one, after this one. But it's only just to form what? A head and shoulder pattern. Okay? And if you're going to use our axe strategy, as you can see, this one, we have this one, it went down. Okay? So after that one, it broke our structure at this level by this one, and after this one, it showed another a big momentum at this part, and by combining our axe strategy with the histogram of momentum in the histogram, so you would have an idea that okay, so it's going to be a bearish movement after this one. It gave another chance, but actually it just showed a head and shoulder pattern. So from there, diba, it moved down. So I think this is about 13% difference. Actually, 20% difference, right? So you would have earned a lot if you're going to combine. So that's why it's very important for you, for us to always use or apply our technical analysis in every strategies that we use. Okay? So don't just rely solely on strategy. Even axe strategy, don't just rely solely on strategy that it broke our it broke our structure, it made new high, then it made this one. So you can always check for other indicators of our technical analysis. You can use volumes, you can use moving average. So all of those are available in our training course. Starting to reverse now for long trade. So we still have to check, no? So I think as of last time, I said that there is a chance that it could still move downward. Is this the one? Maybe the other one. Because I checked that if we're going to check to use this 1, 2, 3, then it could move further low. So that's why, and since our bias is still for bearish movement, so I think that that's enough for us that's enough for us for one trade plan for a long trade. So let's wait for it to make a bullish movement, and let's see if it's going to be just a bull trap movement, so that we can play another short trading. But I'm still going to check. I'm still going to check if there's going to be a better candidate for long trading. But um, it's still quite risky as of now to play for, because if we're just going to look at this, so it's uh, it's showing that it could make a bullish movement. But if you're going to look at it closer by using a trend line, even just a trend line, so it is just here. It just broke our trend line in this one. So it could retest it again. Then after that one, actually, yeah. So it just broke our trend line, no? So there could be some retesting that's going to happen. There could be another pullback that's going to happen. So we just have to observe. So that's a good thing right now that we have this. So at least uh, if we're going to lose, we'll just lose small. Okay? If we're going to win, at least we expect to win a bit bigger than losing small, or at least avoid certain disasters like this one. So, Renz, that's it for your question. This is actually still not established. So, X, A, B, and this is too much. It could have stopped here at least for cipher pattern, but it still move down to this level, and it broke, I think, 141% fib retracement level. So we'll have to wait uh, and observe first. So, X. So what I'm thinking is it could make a further move down, at least minimum this one at to this one, and actually this makes more sense rather than 113%. Okay. And that one. And it could go as low as 161%. But of course, since there's no sign for that one, at least this one, this reversal at this level. So actually, basically, it's at 127. So we may have to wait for it to reach 127 level, or 2165. Okay, so thank you so much. Thank you so much. If there's no more question, so I think we can end this. So thank you so much. Zaira still is watching pala right now. Na Wens TV, thank you Billy, thank you din sa'yo. Which time, so that's your question about the RBT box. So hopefully, one of these days, once we have enough strategies, we're going to show some samples and practical application using all our strategies, RBT box, RBT axe, in combination with, for example, Z pattern or cipher or shark. Next time, I'll be teaching you bat pattern. I'll be teaching you a long crab pattern or butterfly pattern. Okay, then have samples based on the recent chart movement, price movement. No? So as much as possible, if I can find, so my samples will be more on the recent charts. So thank you so much. Bye. Thank you so much. Enjoy your weekend. It's Saturday here in Philippines. So thank you. You have Saturday and Sunday to still continue studying. So keep on studying and keep on